Yo, what's up, gang? Welcome back to the channel, man. It's your boy Crazy Crypto Cliff, aka Triple C's, man. Throw them C's in the chat, you feel me? I got another video for y'all, man. It's a really good video. I just want to give y'all some updates on some plays that we took a couple of days ago. So yeah, we took some option contracts out on CVS, Walgreens, and I got another stock that I'm going to talk to you guys about, okay? So we got a jam-packed video, man. It's going to be great. We hit it out the park with CVS, man. If y'all was following me and watched the video that I posted the other day, I told you I was going to take a long call option out on this, man, in the call option, and it did pay off for us, okay? So we're going to talk about that. But before we get to that, guys, this video is brought to you by the Moo investment app, guys. It is the best investment app platform that I've ever used. So I definitely use them every day to make all of my trades, okay? If you sign up today, deposit $100, they're going to go ahead and give you 7 free fractional shares of the Magnificent 7, okay? So that you know that's some of your top stocks, Tesla, Google, and things like that, okay? So if you go ahead and sign up today, and they'll give you those free shares, all right? But that's enough about that, guys. Let's get back to the video. All right, gang. So, man, we got to talk about CVS, y'all. We hitting it out the park with this one. I told you guys on May 29th, if y'all watched my video, I told you I was going to take a call option out on CVS, and man, we hit out the park with this one. So, if any of my 8 subscribers, man, if y'all was watching, man, and y'all followed this play with me, then y'all made some money. You know, we're still in this play right here. I haven't closed it out yet. You know, I got my stop loss set. If you check it out right here, you can see we are up. Share this tab with you guys. We are up 725%. You see right here, I bought it at 40 cents and it shot up to $3.30. So I basically bought it at $40 and now it's at $330. That's what the contract is worth now. So we're hitting it out the park with this one. We still gonna ride the wave on this one. We got our stop loss set, so we're gonna be in profit regardless. If you check this out right here, it's gonna expire June 14th in 2024. All right, so we're killing it with the CVS. We're gonna continue to follow this play. Yeah, so guys, like I was saying, you know, I felt like CVS is a really good company. They're definitely making profit. You know, they're not losing money. You know, like Walgreens is. So you know that goes a long way. And so this is definitely a good play. Hope you guys can get in on it. You know, like I said, we're gonna keep an eye on it to see how high it's gonna go. Got our stop loss set, so we all set with this one. All right, guys, so what happened with Walgreens, right? So the last video I made was on the 29th. Boom, it was right here at 1523. I said it was going to go down even lower, right? We'd already had some, we'd already taken our option contract out on this. We're already up pretty nicely. Boom, went down some more. You know, we set our stop loss, 20% stop loss. So it did go all the way to 1470 and it found support right there. I thought it might go lower, but it didn't. It did find support right here. I do think it's going to go back down lower in the long term, just based on the technicals from my standpoint. But like I said, it found support right here. Started coming back up. I had the stop loss set at 20%. I didn't even let it get there. I went ahead and sold this contract. Boom, because we had already made profit, right? So what I'm going to do, I'm going to just wait on this before I take another contract. If you take a look right here, support is at 15.6 and resistance is at 19. Profit ratio 15%, right? So only 15% of people who are in right now are in profit. So basically right now I'm gonna just take you know, a wait and see approach from this standpoint. You know what I'm saying? We already made money on this. You know, we made a nice little profit. If it starts to come back down, I'm definitely gonna, you know, be looking to take another option and ride the wave back down. I'll wait until it, you know, gets close to resistance, maybe, you know, around $18. I might, you know, if it starts getting into that range, I might look at taking the option, or if it breaks resistance, you know, goes past 19, then I might look at taking the option, a call option going upwards, you know, so we can win either way in this game, you know what I mean? So you got to know how to do both. So that way you're always making money, whether it's going up or whether it's going down. All right. So, I mean, that's pretty much it with Walgreens, you know, so we made a little play on it. We're going to keep an eye on it. You know, I like to, you know, go with the same plays, you know what I mean? Because you're keeping track of these companies, so you already know which way they're going, you know, more than most people. If you're following the same plays, you know, it's a lot easier to make money that way. Like I said, right now we're just gonna wait and see. You know, we're gonna come back to it. You know, based on, you know, where it falls. I still don't think it's a profitable company, so I think it's going to come back down here, you know, in a couple of days, probably next week. I think it's coming right back down. I'm going to be ready to ride that wave on the downside with a put option. All right, so that's pretty much it on that. All right, guys. So next up is Rivian Automotive, guys. We got to talk about Rivian Automotive. Okay, this is a play that I'm looking at for next week. For next week when trading starts again. All right. So I did already take an option. I took an option contract, a put option already. I'm gonna tell you about that here in a second. But let's take a look. So Rivian Automotive currently sits at $10.92. Right. It's down $7.11 in the past 6 months, minus 39%. So it's been taking a hit for the last 6 months. It's been going down. They've been losing money. So I'm taking a look at that. So this is what I want to show you guys. So Rivian CEO warns of rocky road ahead as production revamp to cause messy Q2. All right. So RJ Scaringe, the CEO of Rivian, this is what he said right here. All right, so RJ Scaringe, I'm not sure if I'm saying his name right. He cautioned investors on Thursday that the second quarter of 2024 could be challenging due to production disruptions. It says what happened. Scaringe, speaking at Bernstein's 40th annual Strategic Decisions Conference, said the EV company is experiencing a slowdown in the second quarter due to a production shutdown in early April implemented to integrate new equipment and hundreds of robots at Rivian's Normal, Illinois factory. From an investor perspective, the second quarter is going to be messy. Okay, and then after that, he's here. He says these upgrades are expected to increase R1 production line rate by 30% and incorporate cost-saving changes to the vehicle, as detailed by Scaringe during Rivian's first quarter earnings call earlier this month. So the impact on investors. The R1 is Rivian's only current consumer vehicle besides delivery vans. The company plans to begin production of the R2, a smaller and more affordable SUV priced around $45,000, competing with Tesla's Model Y at the same Illinois factory in the first half of 2026. So it says Rivian received a strong initial response to the R2 with over 68,000 reservations within 24 hours of its unveiling in March. Despite exceeding analysts' expectations for first quarter revenue, Rivian reported a net loss worse than feared. The company also lost $38,784 on each vehicle delivered in quarter one. However, Rivian maintains its target of producing 57,000 vehicles in 2024 and achieving a positive gross margin by the fourth quarter. That's the CEO of Rivian, and he's coming out and saying this. That's something that you want to take a look at, right? That's not good news. He's telling you it's going to be a messy, second quarter. So that that's part of the reason why I took my my put option on this. So let's go ahead and let's see here. Let's take a look at the numbers. So revenue, they bring in $1.2 billion, right? That's pretty good. But the only problem is that they lose $1.48 EPS. That's the earnings per sale. All right. So take a look here. Company valuation. If you look at the price to sell, it's at $2.18, right? And if you look at that in comparison to the industry average, it's twice the industry average. So what that indicates is that it's overvalued, and I think that's something to take a look at. It's overvalued right now. So that's another reason I took the put option. It's a little bit overvalued, so I think this price is coming down, especially with what the CEO just said. I definitely think in the long term that they're probably going to come back. It's going to come back up. Short term, a put option. All right. So if you take a look at their net income, so this is this is how you can tell if they're profitable or not. So they're definitely not profitable. So if you look, quarter one 2023 minus $1 billion, quarter two 2023 minus $1 billion, quarter three 2023 minus $1.3 billion, quarter four 2023 minus $1.5 billion, and then quarter one of this year 2024 minus $1.4 billion. So they're definitely not profitable right now. And like I said, the CEO just told you, expect a messy second quarter. So all signs to me are basically pointing towards a short-term put on this, and with the potentially of a long-term call option. If it ever starts to reverse and go, and start to correct course. All right, guys. So based on that information, this is how I'm going to play this right here. So you can see on the screen right here. I did go ahead and take a put option. So a put option, if you don't know, put options is when you believe that the price is of the stock is going to go down, right? So you can see up here. Let's see. Let's bring that down a little bit for you. It's the name of the stock, Rivian. Expires the year. The first two numbers is always the year in options contracts. Expires 2024, June 21st. All right. So I went ahead and took that contract out. You can see right here, shows I bought it at 42. It is currently down right now, but I think it's going to turn around next week. So this is how I'm going to play this. I think short term, based on that, what the CEO said, and some other factors. Looking at, they've been losing money for the last few quarters here. I believe it's going to come down. I do believe it's going to come down. If you look at the chart, I think it's going to come back down to around $8 before it starts to reverse course, and maybe you'll see a bounce back from Rivian Automotive. But that's just what I see. I could definitely be wrong. I don't have a crystal ball. I don't know everything. I'm just looking at the numbers. The numbers not that good. They're doing some different things in the production side. To try to turn course, but I don't think we'll see it materialize just yet. All right, so that's it for that. All right, gang, that's it for this video, guys. If you like the content, man, go ahead and like and subscribe to the channel, and definitely turn on that notification bell so you can notify when I drop some more content. I'm definitely going to be putting out some more content maybe later today or tomorrow. It's going to be a crypto video where I talk about some crypto plays that I'm going to be getting into. All right, the link to the Moomoo app is down in the description, man. Go ahead and sign up so you can get those 7 fractional shares for free just by depositing $100. All right, that's all I got for y'all today. I'll see y'all tomorrow in the next video, and I'm gone.